Hello viewers, we'll be going over natural gas. In this video, we'll be going over the day-by-day probability model, technical performance, how we find the models, and the day-by-day forecast for natural gas. So back to the technical analysis. Today we're down 6 basis points on the 1-hour chart. We start to approach to positive MACD, and if we expand that further to the 4-hour chart, we are still in between positive and negative MACD. However, we do see a slight convergence today, and if we expand that further to the daily chart, we also see a convergence on the daily MACD, which is still negative. At the moment, we may see a slight reversal in play, so if we do head up higher, the next resistance that I see will be around the 18-day moving average, which is around a price of $1.73, and that also coincides with past support that dated back to February 28th and back to March 9th, and as well as February 10th. So we have a resistance level around that range as well. And if we do manage to break higher, the 50-day moving average will act as another resistance, as indicated back in March 10th. So at the moment, if we do manage to head up higher and touch the 18-day moving average, that price movement is roughly around 5% to the upside. And as for support, if we do reverse and head down lower, the next support level was made back in March 23rd, around a price of $1.52. So if we do manage to fall lower, that price movement is roughly around 8% to the downside to head back to support last week. So back to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So as the days progress to the 7th day, we have a 67% chance for natural gas to climb higher between 0 and 3%. And on the extreme case, we have a 33% chance for natural gas to climb higher between 6% and 10%. And at the moment, we do not have percent chances to the downside for natural gas. So let's examine the day-by-day forecast for natural gas. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match, and this trend dates back to May 17, 2013 to August 13, 2013. So let me point out why these two charts are similar. So what we have here in the current trend, we start off at the middle Bollinger Band, and we can mark this as a peak. And next, let's just mark all the instances where we see a peak. We see a second peak here, and then another peak, our third peak near the end of the trend, and in between them we see a touch at the bottom Bollinger Band. So we have the 1 point there. Next we have our second point in between two peaks, and then our last peak where we left off, quite near where we are right now. And we have 3 points where we touch the bottom Bollinger Band. So now let's examine the trend in question. So let's just mark all the instances where we do touch the bottom Bollinger Band. We have our first one there, our second one here, and then lastly we have one right towards the very end. And let's mark all the instances where we had a peak in this trend. So we had our first one there. Next we had one here, and our last and final peak is towards slightly between these two trends. And what we have is 1, 2, 3, 4, 5, 6 points. We also have 1, 2, 3, 4, 5, 6 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was May 17, 2013 to August 13, 2013. Back then, natural gas was up around 6.5%. And if we head back to the day-by-day probability model on the 7th day, we are in the standard deviation of 33% chance for natural gas to head up higher between 6 and 10%. And one thing to note for the trend in question. As we observed here on this point, it was touching the upper Bollinger Band. However, on this instance, it is touching the middle Bollinger Band. So do take that into consideration. And let's examine more closely in the technical performance of these two trends. So the trend that we are currently in, we are 36% down from monthly high, 12% or 12 basis points from monthly low, 2.5% lower from 10 simple moving average, 7% lower from 20 simple moving average, and 11% lower from 50 simple moving average. And the trend that we just examined, we are down. The trend that we just examined was down 31% from monthly high, 2% higher from monthly low, 41 basis points from 10 simple moving average, 5% lower from 20 simple moving average, and 9% lower from 50 simple moving average. Slightly similar trend patterns or technical performance patterns that we see in the current trend and the trend in question. And again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.